Will the stock market crash? Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from news.com.au, which is asking, bullish Australian and US share markets could be heading for a big correction. So will we see a stock market crash? Now before we go through this, let's just jump over here to trading economics. We can see right now the ASX 200 is at 6,770. The Nasdaq is at 13,555, and we're at an all-time high. It's just rocketing up. The S&P 500 is at 3,846, and the Dow Jones is at 30,883. We're just hitting all-time highs. Are we at a bubble? More and more people are suggesting we're at a stock market bubble. Are they going to burst? We're nearly back up to all-time highs. We've nearly crept right back up. Now, particularly in the States, are you going to bet against the Fed? Particularly now with Biden in power, there's going to be more stimulus just flooding. So the ASX is not far off its all-time high. So was Warren Buffett right in warning, be fearful when others are greedy and greedy when others are fearful. So-called mum and dad investors keep piling into share markets with nowhere else to go for decent returns as COVID-19 continues sweeping across the globe. Well, yeah, you have your money in the bank. What do you get? Maybe 1.75%, 1.35% if you jump through 50 hoops and, get this card here and do this and sign over your firstborn to the bank, and then it's only for 4 months. So you're not getting any returns there. So, of course, people are looking to the stock market. But the astonishing rise in share prices and key indices that has resulted begs the question, has it gone too far? Well, some of these valuations of businesses, it just seems insane. It really does. It's almost detached from reality. But then, that seems to be the market now. Look at all the IPOs for companies where they had no profit or no prospect. So what are you looking at for your investments? I'm still going, my goal is just to get some passive dividend producing shares. And I'm looking at the US market just with my pocket change, and I'm finding a few there that pay a decent dividend. A monthly one just trickles in, but you're not going to get the insane capital growth of some of these other things. I guess I'm looking at it from a different perspective. Wall Street keeps setting fresh records, with the Nasdaq Tech Index leading the charge in the US, while the Australian share market is back to levels last seen in February before the pandemic sparked widespread shutdowns. Closing at 6,825 on Monday, the benchmark S&P ASX 200 index is not far off the all-time high of 7,162 reached on February the 20th last year. The remarkable bounce has been certainly surprised market observers. Among them, Axie Chief Global Market Strategist Stephen Innes. The Bangkok-based financial markets veteran says the continued buying of non-institutional shareholders known as retail investors has been phenomenal. Well, you're all sitting at home. We saw all the people that were piling into things like in tourism sector, hoping for a big gain. I guess how long do you have to hold the bag there? They're constantly chasing for yield. They don't have an option, he told NCA Newswire on Tuesday. They don't have enough money to buy property, they don't have enough money to buy high-end art, and they don't have enough money to buy Bitcoin. But they have enough money to buy little stocks, and that's why we're seeing these frothy conditions. With interest rates at record lows, stashing money in the bank is clearly not going to earn much. Airlie Funds Management Portfolio Manager Emma Fisher noted in an opinion piece published on the ASX last month that Australian shares were historically expensive, but the market's dividend yield was 3.3% versus the cash rate of 0.1%. You've never been paid more for putting your money into the share market versus a bank deposit, Ms. Fisher wrote. So is it too late to buy stocks? Mr. Innes said it appeared there was still some steam left, but the road ahead would be bumpy and there was risk of a correction. I do feel we're reaching an inflection point, but not because the market is high, but because the market needs proof in the pudding. In other words, they need the economic data to start supporting the underlying narrative. So are we seeing a dead cat bounce, everyone? Are we seeing a market-wide dead cat bounce here? It depends on, on the narrative, or if the economic narrative is to be believed. We've got another article we'll look at about inflation going up today. So that will become glaringly apparent when policy responses to the pandemic dry up. Exactly. When we have the JobKeeper skill pulled back. When we have JobSeeker drop down. When the impact of removing the trading while insolvent starts to be felt. When mortgage holidays come to an end. Then we'll start to see how the economy is going. Hopefully, it won't be too rough. We'll be able to, we'll get off that runway and we'll lift up again. But the danger is we've got all these support mechanisms in place. There will be some people that lose their jobs, and there will be some businesses that have to close when these mechanisms disappear. It's not just going to be smooth sailing. Plus the fact that we've got international tourism still pretty much non-existent, international students non-existent, foreign investment in property drying up. He said he believed the US was pretty much at the end of the runway with economic stimulus measures, while the great unknown was the all-important rollout of the vaccine around the globe. It was not going to be smooth as hoped for, and in fact was looking completely disorganized, which was a worrying sign. It's precarious. It's not going to take much to knock it, the share market bullishness off its axis, he said. He said it made sense that there'd been a global rally in stay-at-home tech stocks such as Netflix, and while China still needed Australian commodities, the new age economy was coming through. The story is too big to miss. Everyone is using technology, and technology is going to be advancing a lot quicker than it has been in the period since the dot-com bubble. The shift is moving away from supply chain dominance. We have to be careful. We have to be probably more selective. Look at stocks that are sort of off the beaten track, but are still industry related to tech. We are seeing in the markets right now little weird names coming out of the blue and surprising everyone. And that's the way I think the investment community is morphing right now. A case in point in Australia is the stellar emergence of the growing buy now, pay later sector. Shares in market leader Afterpay were priced around $37 a year ago and closed at $143.46 on Monday. But some suave investors picked them up for less than $9 in March when the health crisis intensified. That example certainly evokes investment guru Warren Buffett's famous advice: be careful when others are greedy, and greedy when others are fearful. Ms. Fisher agrees. 2021 is the year to be selective with company valuations and generally uncertainty elevated. So there we have it, everyone. Some concerns about a potential correction in the market in Australia or the US. What do you think? Do you think we're seeing a dead cat bounce here? Or is it just people, the bubble? How long can it keep going? How long can the Fed keep propping it up in the States? What do you reckon? Anyway, guys, please like, share, and subscribe to the channel. If you're a fan and enjoy the content I cobbled together here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all next time. Bye for now.